Hello, everyone. Hope you're all doing well. Thank you for joining. Just give it another minute and we will begin the weekly outlook. How are you guys doing? Hello, everyone. Hope you're all doing well. Here, look, let's get started. So, before moving on to the weekly analysis, right, what I want to do is take another macro point of view here and go on to the higher time frame, right? So, this is the monthly chart. When you look at this chart, what immediately jumps to your eyes? Right, to me, we have this here being a monthly fair value gap, and we have this being the previous year high in 2024. Yeah. So the reason why that's important, this isn't a continuous contract, but if it was, right, you can just imagine the yearly chart like this. We open up a new year, obviously, in January. So in the same way that we use the 10 a.m. power of 3 model, we can apply that logic, as I said before, to any candle you can think of. The daily candle, the weekly candle, the monthly, and of course any time frame you can think of, including the yearly. So what we've done so far is something like this, right? And we're currently here right now. It makes sense to reach into that monthly fair value gap, right? And then do something like this in the same way that we would trade the 10 a.m. reversal model. We can apply that logic to any time frame. That's why my models aren't mechanical liquidity sweep fair value gap target 2 to 1. That's nonsense. Bullshit strategies. My models and strategies are candlesticks themselves. The only way possible for a chart to move is using open, high, low, and close. It's the x-axis and the y-axis. The x-axis is time, the y-axis is price. A candlestick is time and price encapsulated into a picture format. And that's as easy as that. People love to overcomplicate trading. It doesn't have to be complicated, it's easy. Now, what would this mean if this picture were to happen, right? This would be an immediate rebalance with the previous year high. And if we get that strength and shift above whatever type of price action we form in the next couple of months, right? Especially if we get past the yearly opening price, okay? If you get past the yearly opening price and we're above it, we can see a nice expansion, especially after an immediate rebalance. We can expect very fast price runs in that direction. But we cannot anticipate that yet until we get the confirmations. So we're still very early into the year. We're 2 months out of 12, right? So we can't, like, it's okay having an idea in mind, but that's not going to be confirmed or 100% guaranteed until a price confirms it to us in real time, right? So as of now, let's look at the quarterly chart. 3 months time frame. We have this here, okay? So if we don't get into this monthly fair value gap, so let's just go to the monthly. If we don't get into this monthly fair value gap and we react just out of this, that's fine too, okay? That's okay as well, because we're just leaving behind an inefficiency on the yearly time frame. And I know I might sound crazy, right, where you're analyzing the yearly time frame and the 3-month chart and the monthly chart. If you want precision accuracy like me, right, you're going to have to put in the work. This doesn't come for free. It doesn't drop from the sky. My win rate is as high as it is because I'm putting in the work. And I have a logic and a reasoning behind all my trades. Starting from the yearly time frame, going all the way down to the 1 minute time frame, even 15-second time frame sometimes. That's how you get accuracy like me. So you might find this tedious and annoying process that I'm doing, but this is what is expected of you if you want to be successful. So I will just keep that low. That I don't care about the 3-month fair value gap, right? The only level that I do care about is that low. Now, after an expansion, right? We know the phases of price. We go from expansion to consolidation back into either retracement or expansion. So after consolidation, we need to see what is going to happen. Are we going to take out the low and go higher for retracement, or are we going to break below and keep going down for a longer, higher time frame shift to the downside, right? So that's what I'm eyeing right now. And this isn't going to happen today or this week. This is just for the whole year, and even going into next year. This is my macro outlook. And you need the macro outlook when you're zooming in for the monthly and weekly analysis and outlooks. So as of now, I'm favoring the first idea. But what I want to highlight is this. We're stuck inside this singular range right here for 1, 2, 3, 4, 5. The last 5 months have been stuck in a range. That is clear defining characteristic of consolidation, and the market is being strangled, right? It's not giving room to go in a specific direction. And there's a reason for that, right? You might think it's random. It's not random. Of course it's not. We're above all-time highs. The market needs to consolidate before it expands again. And during this whole time, there has been so much tension in the geopolitical state of the world, right? Especially in Middle East. And you see what happened over the weekend. And it's also not random. Think about it. Every single major geopolitical news event, it always seems to happen Friday night or Saturday morning when the market is closed. Do you think that's random? Ask yourself that. Do you honestly think that the US striking Iran, Venezuela Saturday morning is random when the market is closed? Do you think the news of major banks failing last year coming out on a Friday night when the banks are closed and the markets are closed, that wasn't random either? Okay, so if you think we are stuck in consolidation here randomly, you have a lot to learn, okay? The escalation in the Middle East will be, in my opinion, not financial advice, of course, just using my knowledge and experience, that tension in the Middle East would be a reason to bring fear into the markets. And I love to see that. I know it may sound horrible, right? War is never a good thing, but this is where opportunity is made. Because when we have the market going down here, everyone in the world, retail traders, banks, institutions, everyone will think, oh, bad news, right? War is breaking out. The market's crashing. Because if we have the next monthly candle going down, everyone's going to think the market's crashing. Everyone's going to be scared out of their positions. I'm licking my lips at that. We went into a monthly fair value gap. Everyone is panicking. Everyone is fearful. I'm going long and I'm targeting this. And what is this? Accumulation, manipulation, distribution. On a monthly chart. I use the same logic for the 930 expansion, for the 930 manipulation, for the 10 a.m. reversal model. And now I'm putting this on the yearly power of 3. Think about how powerful that is. My model is not specific to a certain time frame. You can use it on any time frame and on any chart in the world. It does not matter. If you think that, even just remember what happened during COVID times. Do you think that what happened in COVID times, that big, huge move downwards, just to sweep the liquidity, right? And then continue and have a massive bull run in COVID. Does that make sense? Right? At the start, okay, this is something I want you to write down. And it's true for every aspect of life. The second mouse always gets the cheese. The first mouse gets trapped. Okay? So you know the mouse traps, the conventional mouse traps, that has a bit of cheese. And the first mouse will go and try and grab the cheese. That first mouse will die. And once that trap is already expired, the second mouse can just swoop in and take the cheese with 0 risk. That's kind of what I'm looking at here. Because everyone, 95% of traders, when they see war headlines, the media is rampant with war news and headlines. Everyone is so fearful and pessimistic. And when we get that move downwards that I'm expecting this month, everyone's going to be like, oh, I was right. And they're going to start selling their positions. And what is smart money doing? They're accumulating. They're taking those sell at market order and sell stops and saying thank you very much, whether it's willing or unwilling. If you have a stop loss below here, you're an unwilling seller at the market because you're in a long position and you got stopped out. And if you're scareful and fearful and you don't have, let's say, as a retail trader, you don't have the diamond hands, right? You will get stopped out and you will sell. You sell out of your position at a loss because you're scared of price going even lower. And that's exactly where smart money, and myself included, will be buying. Not financial advice, just my experience. You can take this in whichever way you want. This is just what I'm saying. So we're stuck in this range. We can be stuck in this range for as long as necessary. And I can't stress that enough. I would never want to anticipate a breakout out of the range. Because think about how long we've been in here. Let's go to the weekly time frame. Right, we're doing a weekly outlook now. How many weeks? Let's get this tool out. How many weeks is that? 21 weeks. So you could have 21 weekly outlooks and not have a clue where the market's going because it's just range bounding. If you are expecting an expansion in a consolidation market, you are an idiot. There's no way to put it lightly. I'm trading scalping setups intraday. I'm not looking for home runs. Okay? I am doing small precision strikes because of the environment we're in. I'm not expecting a expansion in any direction because we're in a consolidation. That's facts. The fact is we're in a consolidation. Why would you expect an expansion? If you expected an expansion, any of these weeks you would have lost. That's why everyone you see is very quiet online, right? No one's posting their payouts anymore. No one's showing off their portfolios anymore because they're expecting expansions when the reality is we're in consolidation. And now this news might be a catalyst to finally get us out of the out of the consolidation into a manipulation and then expansion. And that's not going to come yet, but you can trade both of these. And you've seen me do this on the 1 minute time frame using this logic. You can trade the manipulation and the expansion. Okay, this area here, I've been rambling a lot, but I hope that did help with what I'm talking about there. It's just some insights and logic that I've accumulated through my life as a trader. But using this range here, look at the upper 75%, how we were never able to close above that on the weekly time frame. And then look at the lower 25%. So after this low was put in place, the lower 25%, we are failing to get below it. So we're stuck between the upper quadrant and the lower quadrant, right? And this is key characteristics of consolidation. We're just going back and forth between the midpoint of this range, the middle of the range. Now, the yearly open just so happens to align with the yearly midpoint, right? The midpoint of the consolidation on the higher time frame. The yearly open aligns with that. If you look with ES, there's an SMT at this high, right? There's also an internal SMT right here. So now we're kind of getting somewhere now, aren't we? We're leaving the 50% of the range. We're going lower. We have generated liquidity here, here, and here. Like if I were to draw all these areas of liquidity, there'd be a lot, right? So it would make sense for price to take out everyone who's long, make people panic and fearful, and then send price higher. That's obvious to me, right? That's just what makes sense to me. So what I'm going to be looking at for this week, long story short, right, is I'm looking for open, whatever the gap is going to give you more information, right? But I'm looking for something like this, right, for this week, and then we'll see what happens throughout the remainder of the month. Okay. Please disregard this monthly open and weekly open. That's for previous. Let me just actually get rid of that completely. Okay. The only level that matters is the yearly open right here. So it's accumulation, manipulation above, SMT, we break lower, confirmation. So this is reversal SMT. I'll have a video, a lecture on SMTs, but just for now, this is a reversal SMT and this is a confirmation SMT. Because it's in the internal and this is at the external. Easy, right? Easy logic. What I want to see now is, I want to see us stay below this daily order block, right? And more importantly, you can use these two because a series of up close candles. We're not yet below this, so I would be using this for now. Once we do, if we do, get below this order block aligns perfectly with the 0.25 level. So I want to see sensitivity there and then continue lower for the equal lows. Okay? And why didn't we go for those equal lows last week, 2 weeks ago, 3 weeks ago? Why didn't we run down? Because, and the same way that the macro, monthly, yearly is accumulation, I'm anticipating manipulation down, and then distribution. Let's zoom in. What do we see here? Accumulation, right? As I said, you can do this exact same logic on any time frame. Accumulation, manipulation, and then distribution lower. Does that make sense to you? Do you see it? Right? Why didn't we, from Tuesday 17th of February, why didn't we run for these equal lows? Why? So we can set up the next phase of price, accumulation, manipulation, with an SMT, and then distribution lower. It's so simple. You are overcomplicating it for no reason. This shit is easy. And I want to put it to light and show you how easy it actually is. If you just have, your brain has to work logically, not emotionally. The problem with all of you is you're emotional freaks. You can't handle your emotions and you're just constantly staring at your open profit or loss. Keep it as subjective as you can. So, yeah, my outlook is lower on indices, short term, just to form the manipulation, and then we'll see what price confirms during the week, during the days, during the next few months, and see if it confirms what I'm thinking. Let's say we open up, because you never know where the new week opening gap is going to open up. If we open up higher, we move lower, and then take out these highs again, that most likely invalidates my thesis here, and we could see a run higher, okay, for the week. Or we can just continue consolidating for as long as possible. But what I'm anticipating and looking for is a move lower. Especially since we've broken out so nicely. Like, look, with this quadrants and midpoint line, especially the midpoint line. Right, let me just make this midpoint a different color for you guys. Okay. This midpoint line, look how we're just indecisive around it. We sweep these highs internally into a daily fair value gap. We break below it, and look how we respect it. Let me zoom in. Look at that 50% level right here, 0.5. Look how we're just wicking above, and the bodies are staying below. And then we form an SMT at the 50% level. It makes sense to me that we go lower now for these external range liquidity. Because this, everything that happened here last week and the week before was just enticing people to go long maybe, and then continue lower, and then we have our information given to us as price develops. Any questions on that? Thoughts on some saying the war news is bullish? Yeah, I've said that. Yeah, the war news is bullish, but remember, the second mouse gets the cheese. So if people think the war news is bullish and we go lower, they're liquidated. If people think the war news is bearish and they enter shorts, not knowing that it's only manipulating lower to go higher, they eventually get liquidated as well. So it's a lose-lose situation. If you're bullish or bearish, it's a lose-lose situation. Unless you are smart money, part of the 5%, like I just outlined for you right now. It's a lose-lose for everyone that's bullish or bearish. I am bearish and then bullish. Do you understand the difference? It's a completely different state of mind. People would look at these news events and think, I'm bearish because of this, I'm bullish because of this. I see the news events as an excuse for price to do what it was always going to do in the first place. So do not get emotional on news events and headlines. Never. It's designed to be released at a specific time of the week, of the year, of the month, and it's designed to induce certain emotions for the masses to do a specific thing. Have you ever did swing trading? Yeah. No, not recently, right? And you can see why. I'm a scalper in these conditions. If what I've outlined here does come into fruition, then I can become a swing trader and an intraday trader on prop firms. It's just one. It's for a swing trader, right? Imagine how frustrating it would be if you're in a long or a short. You're guaranteed to lose. For a swing trader, it's very important to have patience. You have to have patience for sometimes months, even years, before you can enter a position. That's why I like the intraday 1 minute chart, because I can have multiple trades in one daily candle, right? I don't need to wait months for an entry. If your bias doesn't align, you don't trade that day. Okay, a bias is I'm never stubborn on my bias, right? It's nice to have an anticipation of what you want to see price doing. If price confirms your idea, then you just get alongside, right? You do what you were planning on doing. If price invalidates your bias, then you're getting information there as well, aren't you? If price invalidates your bias, then just go the opposite direction. You're wrong. Right? I don't have any ego. I'm not... Let's say next week we have an up-close week and we don't go lower. Does that mean that I'm unprofitable? Does that mean that I haven't made money that week? No, it just means that my initial idea, it's all an idea, was wrong. But the idea comes from logic. And price action will confirm it intraday. Alright, minute by minute, daily candle by daily candle. It will confirm or invalidate my initial bias. Are you short? Are you shorting NQ on open? Come on. Are you kidding me? Are you going to trade at market open today? Oh my dear God. Yo, I don't know what to say to you. Alright, just you get some help. No, I'm not trading the market open. Are you even listening? The first mouse always gets trapped. The second mouse gets the cheese. It's that type of thinking that 95% of people have. Right? The reason why, again, these things happen on the weekend is, so first of all, there's no immediate market response. And second of all, people are speculating. People are itching. You're a gambler. You're a gambler and you're itching to trade. Get help, right? You're not in the right industry. If you are having those thoughts, get out and save yourself while you can, because you're going to lose everything. You need to be professional. Okay? I'm not short in NQ at the open, no. Short answer, no, I'm not. I'm going to wait for my models, and I'm going to wait for my models to confirm my ideas. That's what I'm going to do. And I do that on a daily basis every single day, no matter what day it is. How long you been getting constant payouts for? Over 2 years. Yeah, so the first 4 years were obviously just discovery phase. I never had a mentor or a one-on-one coach. Everything I learned was myself. So as you can imagine, it took a very long time until I got consistent. But once I got consistent with my models and what I wanted to see in price and what I was looking for, it was very easy. Okay. Right. So that's the news with indices, right? We're in a consolidation. I want to see if we can manipulate lower and expand higher. It's literally the same logic I would use in the 1 minute time frame. Okay. Crypto. If you're trading crypto, right, it's relatively easy to see where we're going, right? Ever since we had even this first weekly inversion, right, it's kind of clear to see where we're going. This just confirms that we're going lower. I want to see if we can maybe have a move towards this. And yeah, okay, look, this, I don't trade crypto, but just remember what happened last time. We had a bear run. We were down 77% before expanding back higher. If we have an equivalent 77% drop, we would be all the way here. And at this point, if price were to go all the way here, everyone who was long is wiped out. And everyone is thinking that it's going to go to zero. So these are coordinated events that are happening for a reason, right? The diamond hands traders will get shaken out. They will either get stopped loss or stopped in profit if they're trailing. And then smart money comes in and swoops Bitcoin at a beautiful discount, and they can take it to whatever number they want. Right, everything is manipulated, just please know. I would not be taking any trades on crypto. Right? Not yet anyway. We look at gold. Gold is, it's obviously bullish, right? When we had that massive news, where it wasn't even news, it was complete, obvious, blatant manipulation. I told you guys when that, go back to my last weekly outlook, it was from 3 weeks ago. I told you when we went lower here, it's a manipulation and we're going to go higher. We just went down into a monthly fair value gap randomly, right? This random decline of almost 50%, right? This random decline that happened so quickly, it just went into a monthly fair value gap. Right? Manipulation, distribution. That's what I'm looking at anyway. You can have your own opinions, I don't care. But this looks very simple to look at, right? Monthly fair value gap, we have an SMT with gold, right? Gold made a higher low, and you can see gold is clearly the stronger asset, where it's nearly already at all-time highs. So gold is nearly already at all-time highs, whereas silver still has a lot of room to go. So obviously, metals very, very bullish, even long term, for as long as possible, right? Metals very, very bullish right now in this environment. Yeah, oil is a disaster. This is a consolidation that we've been stuck in. It's not like Nasdaq it looks like it's bad for 5 months, right? We've been in this consolidation for years, right? Ever since this manipulation lower in COVID, again, clear, blatant manipulation, where you had oil trading at negative, okay? And this isn't a glitch or something, no. People were literally they were paying for someone to take oil off of their hands because they couldn't afford the storage fees. So that's what this was here. It was a coordinated manipulation with COVID. Everyone thought the world was going to shut down for whatever reason. And everyone was forced to take a needle. And I can guarantee 95% of you took that needle. I'm going to tell you right now, I didn't. And I don't want to sound like a conspiracy theorist, but yeah. We're stuck in a consolidation here. And we'll never know how this gap is going to affect us with supply and demand issues, right? You know, the stuff in Iran that's happening, that's going to have some supply chain issues if they close the Strait of Hormuz. And supply and demand doesn't really affect what's going on in the chart, but it's just a nasty range that we're in. And I wouldn't look at oil as a potential investment, right? The investments that I'm looking at are metals, and I like to day trade the Nasdaq. Any questions? How do you know which model is going to work today? All of that is dependent on overnight price action and daily profile. Again, mixing with weekly profiles and your bias and overall draw on liquidity. The models work with the right narrative. So is this why 95% lose money? Yep, it's manipulated. How do you tell your daily bias? Breakout structure? No, not breakout structure. How do you know the difference between breakout structure and liquidity sweep? Right, it's all narrative. That's my next video actually. So every Tuesday at 6 p.m. I upload a video to help you guys. The first 3 were model videos. After I explain to you what my models are, I need to show you how to implement the models. The first lesson will be daily bias. Okay? And then there's going to be a lot more coming, especially in terms with psychology, right? Psychology has a massive, massive, massive part to play in trading. And as I've been talking about earlier on in this video, the psychological side of being manipulated, right, by the news narratives, by the media, for the sole purpose of having emotions induced in 95% of traders. Because 5% will not look at the media and they are resistant. They're not going to fall for emotional, psychological warfare, okay? But 95% of you will. And that's why 95% of you will lose. And that's not arbitrary number. It's a statistical. There's evidence to back it up. 95% of anyone who tries to trade will lose money. Okay. I think market is designed to beat human psychology and play his emotions. Yeah. Can you walk us through last Friday's daily profile and how you knew what would happen? Well, long story short, right? Last Friday was the last day of the week and the last day of the month. Think of this. The exact same picture that I'm always drawing for you guys every single time in every single contest. Open, low, high, close. This is a candle anatomy, right? This area here at the close is the last day of the week or the last day of the month. The last day of the week and the last day of the month was on Friday, so it's obviously going to be a consolidation. So I was just looking for a quick 930 model. And it's actually outlined in the video that's rendering, right? I have a video basically summarizing the whole month of February and how I was able to take out over 100k in payouts, even in horrible price action. So I recommend you watch the video that's I'll probably try and release it tonight after this. So if you want to know what I did on Friday, it's actually outlined in that video. But do you like tortas? Volume profile. No. Definitely not. There's going to be a separate video on that. But in the same way that I can tell you, 1 of 3 of my models will happen every single day at a minimum. Sometimes 2 of them will happen in a day, right? There's specific daily profiles. There's only 3 ways that a daily candle can form. It's never random, right? Because if you get the data like I have over 6 years, every single day looking at the data and studying the data, I'm looking for coincidences, right? That's what I'm looking for. And it just coincidentally happens to be that the daily candles form in 3 specific ways. And no, it's not a coincidence. I will teach you that in another video. What's your daily routine? Yeah, there's going to be another video on that as well. I don't have the same routine as I did when I was earlier on in my stage of development, right? Because everything is ingrained into my brain. Like, I do the exact same thing every day for a year. You're not going to have a daily routine. But if you want a good routine, wake up early, do some exercise. You can't just wake up and straight away go onto the computer. Wake up 5 minutes before market open. You're guaranteed to lose. You have to be in the right state of mind. Right, look, we're getting fairly far into this video. I've covered all the markets. I've covered what I want to see happen. This is all contingent on how we open up. If we open up with a massive new week opening gap in any direction, it could invalidate the thesis, right? Or it, not even invalidate, just we have to change and make some tweaks. But I will update you guys daily in the Discord. If you made it this far, it means you really want to learn. And if you're not already in my private Discord, it's free, right? It's just for people who really want to learn. And that's the only type of people that I want in this Discord. It's going to be a close community where I will, I guess I'll update you guys and you'll learn. So if you did make it this far, comment down below weekly profile, right? I'll give you a one-time Discord link to join. Are your losses caused because of something you haven't seen during 6 years? I don't understand. I don't understand what you're trying to say there. You're changing lives, man. Thank you. Okay, thank you guys for watching. Have a good rest of your weekend. and be ready and vigilant when it comes to trading. Just remember, be patient. Don't force anything. Don't go in and try to short the Nasdaq at Sunday market open. Not even market open. Just don't.